Assalamualaikum and greetings to all. My name is Muhammad Nur Patra. Today I'll be presenting about our MGT646 quantitative research method thesis entitled The Impact of Consumer Boycotts on Nestlé's Financial Performance. Our group member consists of Siti Wan Suhaila binti Moksin, Rasdi bin Ahmad, Shani Debra Johnny, Nur Kashira binti Ji, and myself, Muhammad Nur Patra bin Salto. So without further ado, let's begin with the presentation. In this presentation, I'll be explaining about our thesis starting from our Chapter 1, Introduction, followed by Chapter 2, Literature Review, then the Chapter 3, Research Methodology, and Chapter 4, which is Results and Analysis, which comprises of Descriptive Statistic, Regression Analysis Results, Unit Root Tests, Johansson Co-integration Test Results, as well as Granger Causality Tests. And then we'll conclude it with the Chapter 5, which is the Conclusion and Recommendation. So let's begin the presentation with chapter 1.1, which is the research background. So Nestlé is one of the largest food and beverage companies operating in over 80 countries with brands like Nescafe, KitKat, Maggi, and Milo. Despite its global success, Nestlé has faced multiple consumer boycotts over ethical concerns, environmental issues, and political controversies. The most significant boycott was due to Nestlé's alleged business ties with Israel, leading to large-scale boycotts, particularly in Muslim-majority countries. So our study only involved Nestlé Malaysia and focus on the impact it caused to Nestlé Malaysia's financial losses. Next, we proceed with 1.2, which is the problem statement. So, why does this study matters? Consumer activism has become more powerful than ever, with boycotts emerging as a popular tool to pressure corporations into making ethical changes. Thanks to social media and digital advocacy, consumer boycotts can spread quickly and globally, influencing corporate reputation and financial performance. However, not all boycotts have the same impact. While some companies face long-term financial losses, others recover quickly and continue to grow. This raises an important question. Do boycotts actually harm a company's financial stability, or are they just temporary disruption? Our study focuses on Nestlé Malaysia, one of the largest multinational corporations which has been subjected to several consumer boycotts, including calls to boycott due to alleged business ties with Israel. Through financial analysis of Nestlé's key performance indicator, this research aims to determine whether boycotts had a lasting negative impact or if Nestlé was able to maintain resilience and recover financially. In this study, we focus on three key objectives. So the first one is that we analyze Nestlé's financial performance before and after boycotts to determine if they had a lasting impact. Second, we assess changes in revenue, stock prices, and investor confidence to see if boycotts cause financial instability. Third, we evaluate how Nestlé managed financial risk post-boycott, identifying whether the company successfully recovered. So, in order to achieve this objective, we ask three key questions. The first one is, what financial impact do boycotts have on Nestlé? The second one is, can Nestlé maintain financial stability after a boycott? And the third one is, how do boycotts affect investor confidence and stock prices? So, these questions help us understand whether boycott truly harms Nestle finances or if the company remains resilient. Next is chapter 2, which is the literature review. So under 2.1 theoretical framework, our study is based on the signaling theory, which suggests that boycotts act as market signals, which means they can influence consumer purchasing decisions and investor confidence. So to measure the financial impact of boycotts, we analyze 6 key financial indicators. So the first one is net profit margin, NPM. This tells us how much profit Nestle retains after covering all costs. The second one is stock prices, LSP, which reflect investor reactions if stock prices drop it may indicate a loss of confidence due to boycotts. The third one is annual sales (ANS), which measures whether consumer purchasing behavior change post boycott. The fourth one is the number of shareholders (NSH), to see if boycotts cause shareholders to sell their stocks, which indicates decreased investor trust. The fifth one is cost of goods sold (CGS), which affects profitability as higher production costs can reduce net profit margins. The last one is boycott dummy variable (BYT2), coded as 0 for no boycott and 1 for boycott periods, which help us track its statistical effect. Previous research shows a mixed result. Some companies suffer long-term financial damage, while others recover quickly due to strong brand loyalty and strategic crisis management. Okay, now we go to chapter 3, which is the research methodology. So under 3.1, which is the variables and hypotheses, we have included all of the H null and H1 for all of the independent variables that we use for this study. And so for annual sales, we expect that if boycott occurs, it will negatively impact annual sales, which in turn could reduce net profit margin. For stock prices may reflect investor confidence. So if a boycott lowers stock prices, it could indicate financial instability, potentially impacting net profit margin. For the number of shareholders, a reduction in the number of shareholders may signal declining investor confidence, which could negatively affect the company's financial stability and profitability. For cost of goods sold, a higher cost of goods sold reduce profit margins, making it harder for a company to maintain profitability. And for the last one is boycott can directly impact sales and revenue, which may lead to a decline in the net profit margin. For the hypothesis, you can see inside the table that we've included. So next we'll be proceeding with the next chapter, which is the research approach and software. Next, we'll proceed with the 3.2, which is the research approach and software. To conduct our analysis, we use a quantitative approach by examining 20 years of Nestlé Malaysia's financial data, 10 years before and 10 years during boycott events. This allowed us to identify trends and measure the potential financial impact of boycotts. For data analysis, we use eViews, a specialized software for financial and time series analysis. eViews provided accurate statistical results and ensured the reliability of our findings. We applied 4 key statistical methods. So the first one is multiple linear regression. This helps us measure the relationship between financial performance and boycotts, determining if boycotts had a direct impact on sales, stock price, or profits. The second one is augmented Dickey-Fuller (ADF) test. This ensures our data was stationary, meaning financial trends remain valid for analysis over time. The third one is the Johansson co-integration test. This method checks for long-term relationship between financial variables, helping us to see if boycotts had lasting financial effects. And the fourth one is Granger causality test. This test help determine whether boycotts cause financial changes or if other factors such as operational costs or market trends were responsible. By combining these methods, we were able to generate robust and reliable findings on whether boycotts had a significant impact on Nestlé Malaysia's financial stability. Okay, now we proceed with chapter 4, which is the results and finding. So for 4.1, which is the descriptive analysis, our descriptive analysis provides an overview of Nestlé's financial performance over the study period. We observed that stock prices and annual sales fluctuated due to external market conditions and company-specific factors, but there were no drastic declines even during boycott periods. This suggests that Nestlé's revenue remained relatively stable despite public pressure. Net profit margin remained steady, indicating that the company was able to mitigate financial risk effectively. However, cost of goods sold increased significantly, reducing overall profitability. This suggests that rising production and supply chains costs had a greater financial impact on Nestle than consumer boycotts. These findings indicate that while boycotts may have short-term effect on market perception, Nestle's financial fundamental remains strong throughout the period analyzed. Next, for 4.2, which is the regression analysis result, our regression analysis was conducted to assess whether consumer boycotts significantly impacted Nestle's financial performance. Among all the independent variables, only cost of goods sold was statistically significant, with a p-value of 0.0264, which means that higher production costs had a direct negative impact on profitability. So it causes a reduction in Nestle's net profit margin. So the boycott dummy variable BYT2 had a p-value of 0.2026, which is not statistically significant. This indicates that boycott did not have a measurable effect on Nestle's profitability. Despite public backlash, Nestle's financial position remains stable. Additionally, we found that stock prices (ASP) had a p-value of 0.4931, meaning that boycotts did not significantly affect investor confidence. Annual sales had a p-value of 0.1006, showing no strong correlation between boycotts and revenue decline. These findings suggest that Nestle's brand strength and global market dominance help it withstand the effects of consumer boycotts. The company's pricing strategies, supply chain efficiency, and market positioning likely played key roles in maintaining financial stability. In 4.3, we'll discuss about unit root ADF tests. To ensure the accuracy of our regression analysis, we conducted the augmented D-key-Fuller ADF test to check for stationarity in the data. Stationarity is important in time series analysis because non-stationary data can produce misleading regression results. Our test confirmed that all financial variables were stationary, meaning they followed a consistent trend over time rather than fluctuating randomly. These findings validates the reliability of our regression analysis and ensures that our results accurately reflect the impact of consumer boycotts on Nestle's financial performance. In 4.4, which is the Johansson co-integration test result, the test is applied to examine whether there was a long-term relationship between boycotts and Nestle's financial performance. Co-integration would indicate that these variables move together over time, meaning that boycotts would have a lasting financial impact on the company. However, our results showed no significant co-integration between boycotts and financial performance. This suggests that while boycotts may cause temporary disruptions, they do not create lasting financial instability for Nestlé. In other words, Nestlé was able to recover from the effects of boycotts without suffering permanent financial losses. The last test that we did, which is the 4.5 Granger causality test, we conducted the test to determine whether boycotts directly cause changes in Nestlé's financial performance. The key finding from this test was that boycotts did not Granger cause changes in net profit margin, which is P equals to 0.1117. This means that there was no strong evidence to suggest that boycotts lead to declines in profitability. Instead, the primary driver of profitability changes was the cost of goods sold, which had a stronger impact on net profit margins than consumer activism. These results confirm that Nestlé's profitability was more affected by operational factors such as production costs, supply chain expenses, and global market conditions rather than consumer boycotts. This suggests that while boycotts may generate public attention, Their actual financial impact on large multinational corporations such as Nestlé Malaysia is limited unless they lead to disruptions in production, costs, or long-term brand damage. As a conclusion, our study found that consumer boycotts caused short-term disruption but did not impact Nestlé's long-term financial stability. Stock prices and annual sales declined slightly post-boycott but recovered quickly, showing that Nestlé's market strength helped maintain financial performance. Investor confidence remained stable with no significant drop in shareholder numbers. The key finding was that cost of goods sold was the only significant factor affecting profitability, with a p-value of 0.0264, meaning the production cost had a greater impact than boycotts. In conclusion, while boycotts attract public attentions, they do not cause lasting financial harm to large, well-established corporations like Nestle. Lastly, for the recommendation, to minimize financial risks and maintain stability, we propose three key recommendations to Nestle. The first one is to improve cost efficiency. Since cost of goods sold had the most significant impact on profitability, Nestle should focus on reducing raw material and production costs. Optimizing supply chains will help improve cost management and financial performance. The second one is to strengthen crisis management. Although boycotts did not significantly harm Nestle's finances, they can still affect brand reputation. Establishing a rapid response strategy and enhancing public relations efforts will help the company manage boycott situations effectively. And lastly, is to enhance transparency with consumers. Building consumer trust is essential. Nestle should provide clear reports on ethical sourcing and sustainability practices, while actively engaging with consumers through social media and corporate statements to reinforce its commitment to ethical business practices. By implementing these strategies, Nestle can further strengthen its resilience against future boycotts and maintain long term financial stability. That's all from our group. Thank you.